Hey guys, and welcome back. In today's video, we're going to be talking about investing in mutual funds and what these big brokerage firms don't want you to know, so that you just give them your money and they can continue to reap the benefit, taking these big percentages and fees out of your investment on a yearly basis. So I'm going to give a recommendation on what mutual fund that I'm personally invested in and recommend to other people, and just kind of comparing it to some of these major brokerage firms that are looking to get your investment so that they can manage your money and give you personal financial advice instead of you just doing it by yourself, which is a very easy process in and of itself. So just looking at this chart here, you can see that the typical percentage of fees that you're going to pay on an annual basis based on the money, the assets that are in your account, is usually about between 1 to 1.5% with a lot of these big brokerage companies. But this is just a ridiculous number. I'm personally invested in the Vanguard, and I'll show you. I just started investing in this particular mutual fund. It's a Vanguard Target Retirement for 2050. Before this, I had generally on a year-to-year basis been investing in ETFs, but now on this particular website, they're making it so that I can't automatically invest in ETFs on a month-to-month basis in my retirement account. So I did some research into mutual funds, and this is the one that I came up with because my target retirement is going to be in 2050. So you can see here the net expense ratio is about 0.16%, and you compare that over to the fees that you get over at these big brokerage companies, and you're talking about, an eighth, a tenth as much of the fees as you're getting. And you're probably thinking to yourself, how is this possible that some of these other mutual funds can be so much less in terms of their net expense ratio? And the reason Vanguard can do this is because they're owned by their investors and not by private investment or their shareholders. So you're not giving the profit over to those particular people and reaping those benefits yourself. And another reason, it's kind of like whether you go to a traditional bank or one of these credit unions. When you're at a credit union, you're likely to get a better rate than at a traditional bank that also has shareholders and things like that. It's kind of a similar scenario here, but when you invest in a mutual fund for retirement, you want to make sure that you're getting very low net expense ratios, because over the course of 20, 30, 40 years, that's really going to add up to hundreds of thousands of dollars if you're maxing out your Roth IRA or your traditional IRA, for instance. So it's very important to look into this and not just go to one of these big brokerage companies and just trusting them at their word that, they'll have a guy that sells you on different things giving you financial advice, when really the only thing you need is just to put your money in these managed mutual funds that have a target date, and they'll automatically change the percentage of assets that you have in the stock market and the bond market and international and domestic. So for instance, for this particular mutual fund, it's got about 55% of its assets in the total stock market, 53% in the international stock market, and then about 10% total in the bond market, with about 7% of that being domestic and about 3% international. And this is going to be a similar breakdown to what you get at any of these other brokerage firms. They're just going to have a middleman in between that you're paying his salary, you're paying the stockholders, you're paying the private investors. All of that money is getting siphoned off, whereas a company like the Vanguard, they're just putting that money right back into the system, and basically the investors are owning this, and so you end up getting a much larger benefit over the course of time. So I hope this video helped you guys out. You can make an account. I've made one at Capital One Investing to do my retirement investing. I've been happy with it. I've always been a person that's really enjoyed investing. As soon as I turned 18, that was almost 10 years ago now, I made an account on this website. It actually used to be called Share Builder. They were bought out by Capital One, and that lowered their fees, which was great. But it's very easy to make an account on one of these websites instead of just going through a financial advisor to do it. And also, you just feel better about having total control of your retirement in your own hands instead of having to work your way through some financial advisor. If you ever want to move your funds around or take them out or anything like that, you just don't have to deal with that, which is great. So I hope this video helped you guys out, giving you at least my personal opinion on where you should invest, and always looking at what that expense ratio is going to be, so you know that you're getting a pretty good deal over the long term and you're investing for your retirement, because of course you want to get as much of that money that you're gaining as possible back, instead of paying it out to these big companies. So thanks for stopping on in, guys. I hope this was helpful. For more of this type of investing type videos in the future, be sure to click that subscribe button and leave a comment down in the comment section if you have any questions. So thanks for stopping on in. We hope to see you guys in future videos. Bye.